Martin. I'm Deputy Director at the Digital Frontiers Institute, and I will be moderating this panel. This morning or afternoon, depending on where you are, I have the pleasure of introducing Amil Aneja, who leads the strategy and implementation of the migration and remittance portfolio at UNCDF, and Barbara Magnoni, President of IA Consultants, who has worked extensively in the area of remittances. Barbara, Amil, welcome to PATQUA 17 Summit.
Glad to be here.
Thank you, Xavier. Glad to be here too.
Today we're going to talk about digital remittances. No? What are they? What is their significance for financial inclusion? And what are the challenges or barriers that we can identify to their growth? So I'm going to start out with a few questions of my own for our panelists, but we're very interested in hearing from you in the audience. So please be thinking about the comments and questions you might have and leave them in the chat. So Barbara, Amil, let me start by asking you about your views on the pace at which migrants are switching to digital remittances to send money back home. Is digitization of remittances being slower or faster than you expected? Amil, do you want to break the ice?
Barbara, with your permission, absolutely. So yeah, it's a great question, and digital remittances have certainly grown significantly since the pandemic. With some of our partners, especially in the least developed countries where we are working, we have compared the pre-pandemic transaction records to the post-pandemic ones. And to an extent, in some cases, you'd be surprised that where 1 out of 4 transactions would actually terminate in digital channels, we are seeing now 3 out of 4 transactions are actually terminating in digital channels. And this shift is, in fact, steepest for transactions that were less than $200. So what we are seeing right now in the industry is that for some of the biggest players, it is already constituting of more than 20% or 25% of the total transactions. And from the industry reports and trends that we are seeing, we are certainly looking at about 20% CAGR growth through 2026. That would probably lead to close to 50% of the total transactions, going through the digital channels in the next 5 to 7 years. But having said that, I think we also need to acknowledge that this does not dilute the significance of the cash channels in any way, and the dependence that still exists, especially at the last mile because of poor financial payments, physical infrastructure, liquidity issues. But what we are certainly hoping for is that the investment in the CAPEX and OPEX and just the sheer sort of focus back on the needs of the migrants is going to really mutually reinforce the commercial and development objectives of reducing the remittance transaction cost, while also ensuring that more and more players can actually converge their business models towards meeting the needs of the migrants. This is in fact even more important for women who are more likely to use cash channels for sending and receiving money. And, in fact, based on the data and the analysis that we have done, they end up paying more. So I'll take a step back and stop there and would love to hear from Barbara on her views as well.
Thanks, Amil. I agree with you that the pace has been kind of exciting, what we've seen now. I wanted to focus a little bit on what we saw before the COVID, just to kind of contrast it a little bit. We conducted a study with the IDB lab looking at some corridors between Latin America and the US, which is a very specific space. And this was right before the pandemic. And what we found was that the most common channel, about 70% of the migrants we spoke to, used this, we call it the money journey, right? This cash to cash transaction. And that was still quite high. And we were sort of concerned about why aren't, migrants looking at digitization, particularly because many have bank accounts here in the United States. So sort of the level of bankness is no longer a huge constraint, even though it is only about 68% of our respondents had accounts, but still 93% had smartphones, 91% were online all the time. So we, there weren't so many barriers. So we were sort of asking, like, what are these kind of barriers? And 47% of our respondents gave reasons related to inertia as barriers, which is exactly what we're seeing now break with the pandemic. So, inertia is, this is how I've always done it, or this is what's easier for me, or I don't really know what else is out there, like those types of things. And we really saw that, it took something as dramatic as lockdowns and kind of fear to sort of break that down and move toward this, much quicker pace.
That's true. And I think that even in this context, no, of the pandemic, no, we still see that cash is still very relevant, no? Looking at the statistics of the big money transfer companies, no, there's still the big share of the lion is cash, no? So when do you foresee crossing this threshold when most remittances are originated and received digitally rather than in cash? So you think that is something that we are going to see soon, or still there is a lot of work that needs to be done?
Barbara, why don't you go first?
Yeah, I mean, just to kind of piggyback off the conversation about the study that we were talking about, 43% of our respondents were paid in cash. And when you think about that money journey, again, if somebody pays me in cash, I have cash in my hand, and where am I going to take it? Do I need to deposit it into a wallet or a bank account in order to then transfer it digitally across borders? That actually adds a step versus going right to an agent in my neighborhood on my way home from work and just, giving him or her the money right there and sending it there. So the employer channel is something that really needs to kind of like shift and change in order to, in my view, to sort of see this big chunk of people who are still working in the cash space move to digital. This is kind of more on the sender side. On the recipient side, I mean, it really depends on the region. There's so many rural outlets, and it's so difficult to digitize, those really remote rural spaces for multiple reasons. I mean, Amil mentioned some that there's still a lot of barriers there. I don't know what your thoughts are, Amil, on that.
No, I fully agree with you. Actually, what we are also seeing is, and to Xavier, to your point as well, is going to be gradual. And we must all acknowledge that fact, because it is not just about private sector partners actually deploying more capacity and resources. It is also about whether that capacity and resource is being equally met or reciprocated by an enabling policy and regulatory environment that is allowing for the role of non-banking financial institutions to support and to actually meet the needs of the migrants at large, right? Where is the last mile service aggregation happening at the agent? Where is the, sort of access to broader financial products and services happening? Do migrants still feel incentivized? Do they trust the digital ecosystem at large to actually meet their needs beyond just moving money from point A to point B? And I think all of that requires a lot of investment in payment infrastructure. It requires a lot of work by the regulators to ensure that there is more space for the non-banking financial institutions to sort of come out and actually sort of own that space a little bit more. So in the high volume corridors where the transaction sort of receipts are comparatively higher, we would see this happening quite quicker for like, Philippines and Mexico or India and otherwise. But in other corridors, especially the South-South corridors, it may still take some time.
Excellent. And I think that you are touching in very important factors that are conditioning this transition. Is there any particular factor that you see it as an enabler for this transition?
I mean, one thing that I was just talking yesterday about that is so interesting is the way that Colombia is managing migrants, Venezuelan migrants in the country. They have 1.7 million Venezuelans in their country right now, which is an enormous strain. And they're really thinking about financial inclusion in general, not remittances specifically, and kind of how to integrate them more. And there's this kind of new ID process that will help make people more official and allow them to access bank accounts and stuff. And I think that is a great step in the right direction. Here in the United States, those kinds of initiatives have met with some political resistance in different cities in different ways and become a little bit more complicated because they're so politicized. And I don't think we can get away from that problem very easily in this country and probably in a lot of Western Europe as well. I don't know your thoughts on all that.
Yeah, so once again, I think it would be very difficult to pinpoint on just that one thing that needs to happen, because it again is very corridor and country specific. In some countries, to start with, there needs to be again an enabling policy and regulatory environment in the first place. What is the role of remittance service providers? Are the models bank-led or non-bank led? To what extent the remittance service providers are able to actually engage in partnerships? So there are a lot of those things depending on the ecosystem with whom we are speaking with, whether on the financial market infrastructure side, the identification infrastructure side, the policy regulatory environment, or in many cases, the products and services are integrating with different channels as well. So it really depends in different countries where we are, which sort of an environment we are in, that we need to prioritize whether we need to focus first on policy or infrastructure or innovation, or we need to go a bit beyond that, engage with regulators and the Ministry of Finance to also create investment opportunities for the migrants and diaspora to actually also find products that would actually allow them to facilitate investments in the local economies.
Excellent. And let me ask you, how has the COVID-19 pandemic affected remittances, both in terms of volumes and in terms of this digital transformation that we are now talking about?
I'm happy to take that one, Barbara. So so when the pandemic hit, and this time, not just the low and middle income economies, but really the world, World Bank rightfully sort of estimated last spring 2020 that unlike other instances in the past when remittances acted as a counter-cyclical sort of flow during the economic shocks, remittances would decline this time because it really impacted the whole world. But in fact, remittances, at the time were also estimated to decline by 20%, which was north of $100 billion, almost equivalent to the size of the ODA. However, what we saw that after the initial hit, they demonstrated strong resilience, and oftentimes, migrants sort of dipped into their savings or depended a bit on the fiscal transfers, or got sort of access to certain funds that they wanted to send back home. So in fact, eventually the decline was about 1.6%, but only to grow to 7.3% to low and middle income countries as per the most recent World Bank data, which was released last week. So especially at the time when we have seen FDIs and FIIs, going significantly down, we are seeing that more than 20 countries have actually, also seen an increase in their GDP dependence on remittances, and remittances continue to play a very important role as a stable forex flow to the low and middle income economies.
And if I can just add sort of a personal kind of a example of this, not personal for me, but just a more human example, when you are sending money home in a regular way and it's sort of part of your day to day, you might be keeping some aside for emergencies, whether yours or the person back home. When your mother calls and says she has COVID and she needs oxygen and there's no oxygen in the hospital and she needs to buy it in the secondary market, and you're rushing around, trying to get some money together to pay for that oxygen, you're going to dig into your pocket and send whatever it is you have to take care of them. And that's something we found. And I think that says something also about the opportunities in the future for what we can do with remittances, because the money might be there to do more, but there isn't a compelling more yet to do something with. And I think that's sort of an interesting outcome of those trends that Amil was mentioning.
Excellent. And as you know, this conference, the Pathway to 17 Summit, we are looking about inclusive economies and what we can do to really expand and reach the SDG goals. So I want to ask you a little bit about that. To what extent do remittances contribute to financial inclusion goals?
I'll leave to you, Barbara, please.
Yeah, actually, I've been thinking about this a little bit differently lately, and I think it's a little bit topsy-turvy from the way we've always thought about it. But, typically we've thought about remittances as kind of like a channel for leveraging this money and then providing, some sort of investment opportunities and kind of additional product opportunities. But we always thought of it as, let's bank people, let's get people banked, because that's the way that we're going to be able to get money, from one place to another into different kinds of accounts, into different kinds of financial products and services most efficiently. Back in, I think it was 2010 or something, we did a survey of migrants in New York City. We looked at 3 communities, Chinese, Ecuadorian, and Mexican, and really tried to understand what that pathway was for them in sort of starting to become more financially included and financially stable. And it started with earning money, because you have to have money to do anything with money. the next step was transacting, which in the migrant world is really very remittance focused, after which you start to save perhaps informally a little bit. And then if bank opportunities or formal opportunities arise, you begin to have bank accounts and then, access more sophisticated products and services and invest either at home or in your host country. And if we think about that, we actually see that remittances are a pathway to the remainder of those steps, and that we might actually use it as a way to bank instead of using banks as a way to move money. And we're starting to see little evidence of that. So, Remitly came out with this little I think it's called a passbook. I wrote it down, I forgot, product that tries to kind of bring people who are in the cash system into an account so that they can then transact more efficiently. We are starting to see some products around insurance linked to remittances. So remittances actually may be sort of that first step where you build a relationship, you build a transaction history, you build a channel, and then off of that, you can start adding more interesting, more useful, more socially, beneficial financial products and services onto that. And I think that's one of the interesting sort of future steps. I'm not sure, Amil, if you're working on things like that, but that's where I'm seeing it.
Yeah, no, absolutely. Barbara, we are actually working with, around 9 private sector partners across Africa, Asia, Middle East, Europe, Southeast Asia, on not just digitizing remittances, right, which is important, and as you rightly mentioned, is a first touch point, but really trying to digitize the ecosystem towards financial resilience. So it is not just about access to or usage of, it's really about towards what. So we are actually working on linking remittances with insurance products, with nano credit products, but also investment products, trying to sort of create partnerships between wage payment service providers and banks so that it's not just about digitizing one part of the transaction, but how to eventually link it to the broader sort of set of services, that migrants can actually access. To Xavier's point and to Barbara's first line that she's been thinking about, I think we also think about, modern finance, which has always sort of emphasized the importance of the citizen as this customer, as this sort of saver and an investor and a political actor. But what we do not necessarily do within the space of migration is actually allow for that space to manifest, right, in its entirety. It's to me one of the most inefficient supply chains on the planet, right? Because from end to end, when migrants are actually having that journey, they have left their home country, and now they are actually in a different country altogether. Products and services that would actually help them reduce vulnerability in their home countries are now not necessarily working towards them. And they are being conceived as outsiders who are actually just observers to the financial sector in one of the host countries without necessarily accessing the products and services that they would eventually need. So I think we all need to sort of really take a step back, acknowledge that moving money from point A to point B is important, but remittances should not drive the decision on financial lives for migrants. Financial lives of migrants should actually, sort of really drive the decision of what channels to access for remittances that would allow to build that sort of long-term financial resilience.
Thank you, Amil. Barbara, I really like this idea of remittances as a gateway product to achieve other more transformational financial services. So I think that's great. And knowing about all what Amil was explaining about the initiative UNCDF is working, it's so exciting. I have so many questions, but I also want to give the chance to the audience to pose their own questions. And I see that we have some in the chat. So let me bring some of these questions to you. We have one question from Cheryl that ask about the difficulties that many migrants face in terms of identity. These challenges, I assume that mainly refugees, no? But how that works when they still need to send money back home, no? It's really a big challenge, identification, or which initiatives exist to try to overcome these potential challenges? I don't know if Amil, you want to take on this one?
Happy to take that, but Barbara, please, if you want to.
Oh, go ahead. I'll add anything related to the US. I have a very, the US is messy in this topic. So.
Yeah, so I think it's really important to start with to differentiate between migrants and forcibly displaced. That includes internally displaced, refugees, asylum seekers. So migrants, with the definition itself, considered regular migrants, so to say, which is that they have come through formal channels with an accepted sort of a stay or an accepted sort of visa within a certain country for an economic opportunity or for whatever opportunity that might be, even being with the family itself. So it completely changes the narrative and also the access to identification documents, if you were to be able to differentiate between those two. When it comes to migrants, even when they come through regular channels, access to identification is again messy, as Barbara said, and it's very, very difficult. And we have seen oftentimes that even with regional economic communities, ASEAN, or if we look at Africa, when there are certain sort of trade agreements and when there are regional agreements in place, identification documents of one country are not necessarily accepted. Even when there are equity bank branches in one country and there are equity bank branches in that country, you still have to get sort of identification documents of the host country itself. And unless it's an economic bloc like WIMU or you have CMAC, it's very, very difficult for those identification documents to be accepted. So this is a real challenge even for migrants. In the case of refugees, we do see that although UNHCR, along with the host governments, they continue to work with providing an identification document that is accepted by the financial sector, we still see a lot of risk awareness to start with in accepting those IDs. But beyond that, we see sometimes delays, oftentimes from months to like 6 months to just get the ID, depending on the country and where you are. And then also the education at the agent level or the last mile level for them to also know whether this ID is accepted for what sort of a transaction. So this is something which has been a huge challenge beyond infrastructure and beyond utilities. There is a huge challenge on the application of identification document itself.
Yeah, and I'll just add, in the United States, financial institutions in particular are wary of advertising that they accept alternative ID because of the political aspects of all of this, maybe because migrants aren't that financially lucrative. And so this confusion, is even greater. And a lot of the people that we interviewed don't even use their own names and accounts. They might be working through a brother, somebody who is a citizen or resident in the country, and using their accounts and their name and their ID to send money. So it becomes, the family unit and the sort of extended family friendship unit becomes kind of an alternate channel and makes all of this even more complex.
Thank you, Barbara and Amil. I see also that we have some questions on the chat about the cost, no? So how are we doing in terms of reducing the cost of these services? And on a similar question, also we have one attendee that asked about the infrastructure that exists today for this regional integration that really allows a cheaper services for moving money cross borders. So I don't know if you have any reflections on how we are doing on that.
I'm a little countercultural on this one, so maybe Amil, you can start.
That would have been nice, Barbara. So yeah, I think it really depends on how we look at as Barbara rightly mentioned, the migrant journey. How do we sort of put that migrant journey and we do the sort of a migrant job mapping vis-a-vis the payment sort of a journey, so to say, the payment job mapping, so to say. So we look at within a sending country, you have got like a payment instrument, you've got cash and electronic funds transfer, you've got e-money, and then you've got different access points wherein you're either going to the bank branch or an agent, or you're using an app, or you're using USSD. Then you're looking at the transaction accounts, whether they're bank accounts or whether you are looking at some e-money account. Then you are also looking at the type of provider that you're trying to sort of send money through, whether these are banks or whether these are a specialized sort of payment banks now, like Wing in Cambodia, or you do have, those who came up in Philippines and Kenya and otherwise in the region, or you're trying to sort of send money through an MNO. And then on the other side as well, you again got the same chain, which also does exist of the PSPs and then different instruments. So I think we all, do acknowledge that there are certain sort of payment instruments and certain access points through certain transaction accounts accounts vis-a-vis certain business models of the service providers that have proven to be considerably cheaper as compared to those that have traditionally been working either banks or through the cash channel, so to say. In fact, 2 years back, GSMA came up with a study, in fact, in which they mapped different corridors and 50% difference that was quite evident in the transaction cost through the digital channels as compared to the non-digital channels. So I think that in itself is quite sort of evident of what needs to happen for us to meet the sustainable development goals of the 3% across different corridors, of which of this whole 10,000 piece puzzle of remittances, I think infrastructure certainly plays a very, very important role. And we see as part of that effort, we do have different initiatives, starting with the correspondent banking relationships to the payment aggregators, to sort of ACH switches bilaterally between different countries to now, with closed loop, the closed loop systems of Visa Direct and Ripple and Stellar amongst others, to sort of open digital payment ecosystems that are, like those of Project Nexus and others that are trying to create that environment wherein member states that did not necessarily have those infrastructures ready can actually sort of, gradually adapt to a more seamless pace of digitization that would not come at a huge cost on the OpEx cost to them. So, again, this is a mesh of transactions that is going to take a lot of time for us to reach where we want to be.
Thank you. Barbara, I don't know if you want to add anything here?
Well, I mean, I look at quarters that are quite high volume and tend to be pretty inexpensive. And so while migrants are very sensitive to costs, and they will say that they're sensitive to costs, and that, even in our study, a lot of them said, well, I have the cheaper option. And that's something they were somewhat aware of, even though they were incorrect often. I like to put it sort of in the context of kind of the overall, income of a migrant. So when we're talking about sending $200 home, and you might have to pay, let's say 5%, even 5%, it's $10, and you can make that in tips in about an hour and a half. So that's your monthly cost, is an hour and a half of your work is your tips. And so while of course, in an aggregate, that seems like a lot of money when you look at the volume of transactions and all that money that's getting wasted and lost. To the individual, that might not be the number one priority issue when they're thinking about sending money home. I think reliability, speed, trust, those are some of the things that they're thinking about a lot more than just cost. And they might be willing to, trade off a little bit for those things.
Thank you so much, Barbara. Unfortunately, we are just about out of time for this session, but we have a couple of minutes. So let me end up by asking you a little bit about your organization. What are you doing now in the field of remittances in UNCDF and in EA Consultants? Is there anything that you can share with us about that?
I think Amil should start that one.
No, thank you, Barbara. And so again, happy to just share that the last couple of years that we have been invested on this agenda, we did sort of look at this agenda from so many different lenses. We looked at it from the policy and regulations. We looked at it from domestic resource mobilization, as remittance as an external development financing tool, direct linkage with the balance of payments, sovereign credit rating, amongst others. We also looked at it from the point of view of last mile distribution, shared market infrastructure, interoperability, digital payments at large. Also from the inclusive innovation, different business models, products and services, different channels being integrated. But at the same time, we did realize that none of this is important if you are not rooted in empowering the migrants, both women and men. And I think all of our work eventually is now rooted into what we call, again, is like migrant money, which we need to sort of reinforce again and again, that at the end of the day, it's their money and it needs to reach for them to decide how they want to spend it. So where is the choice? Where is the control? Where are the skills to be able to ensure that? And how do we not lose out the focus on migrant women specifically, or women at large? 47% of the migrants are actually women, and the rest who are receiving often end up being women. And they are the ones who are actually investing in their own SDGs on education and water and utilities and health, amongst others. So our work really focuses on engaging with regulators, to create a conducive enabling environment that allow for those remittances to come through digital channels, supporting by providing financing along with technical assistance to the private sector partners, along with mobile network operators, MTOs, banks, other NBFIs to come up with products and services that would again cater to the needs of migrants, both in host and home countries, while also supporting the central banks at large and strengthening their capacity on the transaction level data so that they can base their policy decisions on better evidence. So I'll take a pause at that, and our presence is across Africa and Asia, and we count a lot on Barbara broadly within the LATAM space and also at large on how a lot of our work from the demand side research mutually can reinforce each other's learnings.
Yeah, thank you, Amil. I think on our side, we are looking a lot about, these communication channels across borders and how to use them to sort of push new products and services into this space, particularly around, financial inclusion, whether it's savings or insurance and other opportunities. And that's something we're really interested in. I've been talking to some people about the employer channel. I think the employer channel could be exploited so much more, and needs to, we need to come up with, politically safe spaces to do so. And it would be really fascinating to work on stuff like that. But it takes a while to get people on board on stuff like that. It's political.
Amil, Barbara, it has been great to have you with us, sharing your insights on digital remittances. We really look forward, as always, to having the chance to work with you again soon in the future. And audience, thank you for your attention and participation. I'm looking forward to the rest of the summit, and I hope to see you there. So goodbye for now, and thank you, everybody, again.
Thank you.
Thank you.